Good morning, traders. It's 8:02 a.m. Chicago time on Monday, the 18th of April, 2016. This is another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Overall, uh, the market is in a risk-averse stance. Gold is up 0.58 on the list of products that I watch. Gold is at the top, followed by the euro, which is up 27 pips on the futures, and then the yen, and then everything else is red, with crude oil being down 4.24%. All the equities are down across Europe and all around. So the overall stance right now is risk averse. There's plenty that the market's having jitters about. We do have a continuation of the earnings. PepsiCo announced this morning 89 cents versus 81 cents, revenue in line, and there are more and more companies that are announcing, so that's likely to add to the overall volatility. As you all have probably heard by now, the meeting in Doha was non-conclusive. They could not come to an agreement, and so there is no supply cut on the horizon. Supposedly, they're going to meet again in 6 months in Nigeria, but for now, crude oil is taking a hit. For those who trade crude, you probably saw that there was a pretty decent rally into the close on Friday, and all we've done so far is take that back and then trade a little bit below where we were, and that's how things are shaping up. Given that it's Monday, a quick rundown of the week ahead. Let's look at today first. What's on the calendar for today? The only thing I have, only economic release I have, is the U.S. NAHB Housing Market Index, which comes out at 9 Central, 10 Eastern, expecting 59 for April. We have a bunch of speakers. We had ECB speaker Vilroy. We have ECB speaker not speaking right now. And then we have Fed speaker Kashkari at 11:30 Central, 12:30 Eastern. After the close, we're getting IBM expecting $2.08 and Netflix expecting 9 cents. The rest of the week, tomorrow, looking for the Eurozone current account, the zoo survey, and construction output. In the U.S., we're looking for building permits, housing starts, and Fed's Rosengren. And on Wednesday, we're looking for the German PPI, UK ILO unemployment rate, U.S. existing home sales. Thursday, the Swedish rate decision, UK retail sales, the Eurozone rate decision and conference. That's a big one. And U.S. Philly Fed FHFA housing price and leading index. That's all on Thursday. Thursday's the big day this week. Friday, German and European manufacturing and services, manufacturing PMI and services, U.S. manufacturing PMI, and the ECB survey. That's how the week's shaping up. Let's look at what we did last week. So we'll start off as usual with our view of what we expected. This was Hypo 1 on Friday, a pop up to around 2076, and expecting to find sellers against the point of control. That day was completely imbalanced, as you can see here. And so the expectation is for the market to find that resistance imbalance, and then for it to drop down and start walking towards 68.50, which is the next most valuable price or most traded price. 68.50 is a naked point of control below. So that's how we expected Friday to play out as the primary play. The secondary play on Friday was an early attempt chop and an early attempt down first, that being the key overnight low taken out, and then the expectation was for it to get back up into the 76 quarter, which was the naked point of control, but we were not expecting it to get higher than the value high that was hypo 2, and hypo 2 is Hypo 2 is did not work out. Hypo 1 was the play. So if I look at this is 180 minute. Let's look at volume. Let's switch to 15 minute. By the way, the flex levels, these levels that you see here, if you're using IRT, they've been updated. So here's Friday. Friday opened a little bit higher than where we were when we had our trader bite. Our trader bite price was down here. The expectation is for a push right up to that 76, 76.50. We got 76.50 a little bit later on, although it touched it right at the open. It basically closed the gap at 77, and then it started to move down. We missed our primary target of 68.50 by 4 ticks before bouncing back up and just sitting in the middle. So you can see Friday here, the profile is just very compressed. Volume was pretty low, a P-shaped profile, a lot of liquidity in this area. So I've added this this MC point of control. We'll look at that on the weekly. Again, it's Monday. This trader bite's going to go a little bit longer than normal. We still have our big gap zone below, which is the big target that we're looking at. The mid of the gap zone is 61 and a quarter. 61 and a quarter is the area we're looking for today. It did go down to 58.50 in the overnight, so it already tagged the high from last Tuesday, which is the day before the gap. We gapped up on Wednesday, and the overnight low is 58.50. So we've already tested through the gap zone to the tick overnight, and we're looking to do that during the day session. Again, the profile was showing that it was a sort of short covering. It kept volume on the high side. Volume was in balance. You can see the point of control is inside of the prior day's value area, and so overall, the 3 days of the last 3 days of last week were in balance, and for that reason, we will extend this profile forward to see where we are, and you can see here the point of control shifting to 75.50, which is the reason behind this level that I put up, a new flex level. If you're getting these flex levels, you should see that on the chart by now. But there's a lot that happened up here, so let's switch gears a little bit and go to the weekly. This is the monthly. Here's the weekly. So last week, look at the week before that. When we look at the prior week, we see a lower high, higher low. We are continuing to one time frame up. You could see these lows are making higher lows. That's called one time framing up. The trend is basically up. But last week it gapped through this breakout area and has traded these last 3 days up here, and you can see that there's where the gap zone is. Again, the top of the gap zone is 58.50. The mid of the gap zone is 61 and a quarter. Important levels, important test levels, and then the volume all happened at 75.50. It traded in this little island by itself here the last 3 days of the week. I put in a fair amount of volume. You can see it popping up here on this short composite. So overall, pretty bullish. But this morning coming in with oil being down as far as it is, overall the market is opening right at 2066 beneath the point of control that was our target on Friday here at 68.50. So the expectation this morning is that we would We are opening outside of where we were on Friday, inside of the MC. The expectation is for an open auction out of range, responsive buying. We'll be watching that 69.50 area with the 71 behind it, and then looking for it to rotate down and start tackling this gap zone below. Gap zones, as a reminder, behave like gap zones are unauctioned areas. They behave like low volume nodes or low volume zones. And what that means is that in the most recent auction up from below, if it's a gap up, in the most recent auction up from below, those prices were never auctioned. And I'm only speaking about the day session. They were never auctioned, so we don't know what kind of a response we would have there, what kind of demand or supply is in those prices, and generally we tend to revisit those areas and fill them in, usually a few days after they happen. And I'm expecting that to be today. So the primary hypothesis here is for chop, a push up. Hopefully it doesn't start creeping up like it's been for the last few sessions. A push up into that 2069.50 to about 2071, 2072, let's call it. And I'm expecting it to find sellers here for a rotation down. And then the primary target below would be this 61 and a quarter with an obstacle in the way here at 63 and a quarter, but the primary target's expected to be 61 and a quarter on hypo 1. Okay, hypo 2. Look for it to, again, open auction out of range. Again, we're in the bigger balance, and then the expectation is it attempts to go lower, finds its buyers, and then starts tracking up to 68.50, and then potentially all the way back up to 75. That's hypo 2. This is in the case, remember, where the intermediate trend is bullish, and we have to keep that in mind. And if prices are too cheap or considered to be too cheap down here, it gives us about 12 points of range, from 12 to 14 points of range from our area below to start walking up towards 75. That's hypo 2. I'll leave you with those two thoughts. As always, just save your bullets for later in the week, especially Thursday. We expect the Euro zone announcement, the ECB announcement, to have some volatility, and there are some numbers and earnings throughout the week, so it doesn't make sense to expend your weekly loss limit early on, especially on days like Friday. Last Friday was really brutal in that it just was very, very tight, and when it released, it did so quickly, and it wasn't a very easy read with volume being super light. So overall, not the kind of environment that I like. And don't forget, in the U.S., it's tax day. Today, your taxes are due. So anyway, I'll leave you with that. Just save your bullets for if you don't see what you need to see to be able to exercise your edge. Just don't trade. Just don't trade. Okay? Don't get impatient. Good luck.